Welcome, ladies and gentlemen, to the African Real Estate Podcast, a podcast that will be running on African real estate. It will be passing knowledge to you, our able listener, and our audiences all over the globe. I will be hosting you. I'm Dominic Mwangi, alongside
Victor Kiplagat. The topic is quite interesting. Why real estate is the best investment?
Mm-hmm.
You know, many people think about investment just from the buildings and the roads and the resources without rather understanding the why. They were highlighting some of the reasons why real estate is in fact the best investment.
To mean why everybody should be considering investing in real estate.
Exactly. So to point number one, store of value. You know, the value of property rarely goes down. The value of property, in fact, appreciates as years go by, as airports are built, as roads are built, as industries are built, and even as more buildings are built. You see, a value of property that was there in 2020 will, in 2024, appreciate because the value of property increases as different factors that I've mentioned keep going up or keep on increasing. And also we have on that point of the store of value, we have land appreciation. Land appreciates in three sectors. Number one, in agriculture. Number two, in infrastructure. And number three, in terms of the stock exchange, things to do with dollar, things to do with foreign exchange, things to do with income. The value in itself does increase from one level to another.
All right. Delve deeper in that point of a store of value. You find that real estate, or rather property, there is a security of returns. And this, unlike traditional investments, which include stocks, bonds, and mutual funds, etc., real estate have minimal variance, and the value of real estate, maybe a property, it improves with time, providing a stable source of income. Unlike stocks, you'll find this time the stock market, there is a fluctuation, maybe to the negative. So you'll find your stock value has depreciated. Unlike property, in the real estate, you find they appreciate and they improve in the value as time progresses.
Wow, excellent. Another way as to why we should consider real estate as one of the best investments is that, you know, real estate has its factor, the natural appreciation. When I say natural, I mean that it is not like bound to be pushed by some certain factors, as I mentioned in point one. For example, population is constantly increasing as years go by, as months go by. So you understand that people will need, as population increases, people will need places to live, places to study, places to do business. And most businesses will be in hotspot cities whereby we have what I call first grade or first value real estate opportunities or real estate investments. Furthermore, as more businesses increase, more real estate locations will be in demand. So you find that natural appreciation for real estate investment will always be on the rise. This is one very key area of investment whereby the natural appreciation will always be from one level to another, because people will always desire places to live, places to study, places to do business, places to even have malls. And as I finalize on this second point, as natural appreciation continues, we find that people will need these places, not just because of investment, but also because of the sentimental value of the property that they hold on to dearly.
Exactly.
Yes.
Well, I think the whole reason why people should consider real estate, I think it largely revolves around the returns of the real estate, maybe appreciation, just as we've said, security of returns. You'll also find that the real estate industry, rather the real estate investment, they are high returns. So the time you are selling, it will be more than you bought it.
Yes. Another key area whereby we find that real estate underpins the fact that it is one of the best investments, we have this key factor called forced appreciation. When I say forced appreciation, I mean with real estate, when, for example, you, Dominic, you want to sell a house to a client, there are some of the things that you will do so that you just don't sell your house at a flat rate or at a loss. Number one, things to do with renovation, things to do with repainting or upgrading the house. You'll want to ensure that when you had your house at the first time, it was around 1.2 million. But because there was wear and tear of the buildings or the materials that you used. So it depreciated in value, but not because of the cost appreciation factor from 1.2 million. Because of everything that you've done regarding the renovation, you can sell it up to around 3 million or 2.5 million. Regarding even if you've expanded the property in itself.
Yes. And this may also include landscaping, maybe.
Yes, exactly.
All right, so that's a detailed point on forced appreciation. You'll also find that it can be used as leverage to build equity and wealth.
Yes.
Many a times you'll find maybe let's take an example of a bank. A bank will need a security for you to borrow a loan. In our native language, they call it hanging a title.
Yes.
So if you never had a piece of property, you cannot secure the loan. So this capital, the property may enable you acquisition of more property. It also leads to increase of cash flow as well as wealth.
Exactly. Another point, you might find that in certain countries in Africa or even globally, there are countries whereby they offer tax benefits to investors who focus on real estate. When I say tax benefits, I mean they are given tax breaks or tax holidays, or they are given some legal leeway because they see that this real estate factor of investment is a special avenue to make our country prospective to more investment. That is why you might find real estate investors are also regarded as real estate developers.
As we wind up, Mr. Victor,
yes,
I would also like to ask a question.
Yes.
We have convinced our listener why consider investing in the real estate.
Yes.
What should they do first so that they don't just invest blindly?
Number one, they should be able to get the information. This will be found by research. A key research into how can I invest in real estate? What are some of the opportunities around my environment or around my area that I can invest in real estate? The do's and don'ts in real estate. And also, with the level of funding or finances that I have, what are some of the areas that I can channel my funding? And also, finally, they can be able to visit real estate expos and expeditions so that they can be able to understand. When you meet other investors and you exchange points, that is when you can be able to iron sharpens iron, so they can be able to understand how a successful entrepreneur or investor invested in real estate. So how can I, as a beginner in real estate, do the investment so that I'll be able to get my return in the best way possible?
Right. In addition to that, the first point you said was research. The investor should be open to learning because day in, day out, new knowledge out here, new knowledge of investments, how you should invest, what you should consider, what not to consider. Find out the current performance, prospects, and the key players. How are they? What reports are they giving about the real estate industry right now? You find there was COVID-19. A lot of people disposed their property, but the prospects, rather those who are positive, they thought, wow, this is an opportunity. Maybe the property will appreciate. So those who considered not selling out their property, maybe selling them later, then sold them after COVID, they made more profits. So listening to reports and future prospects, that can also aid in what you can choose to invest in as real estate. You'll also find that you have to analyze your cash flow and finances. You will have to learn your finances after analyzing how much you need as the capital requirement and the expenses, so that you can weigh, is it a viable project? Should I continue investing in the same? You'll also consider maybe the rate of appreciation. You'll find that some places they appreciate in a lower rate than other places. So when investing in a real estate property, you should consider a location that the appreciation is at a higher rate so that you'll get more returns. And finally, you have to conduct due diligence. This is a place where majority of investors do mess. Because you've seen an advertisement on the tele, you believe and you want to think that this person is genuine. For example, take an instance of the demolitions that have been going on around the country. You'll hear majority of those who own the homes, they say, but we bought them from a particular person. It was legal. But when you go to the government documents, when you go to the land registries, you'll find that this land, initially, it was a public land. So whoever sold it to you did sell to you public land, which is against the law, and you never did your research. So you are ignorant to the point that you bought this land. So you suffer the consequences. Due diligence ensures that you reduce the risks as well as prove the availability of the property, the valuability, as well as the profitability.
Exactly. And I think one more bonus point, when you have real estate or when you have put your resources and financing and you put all your mind into real estate as an investment, not only for now and here, but also for the future, you can be rest assured that the cash flow income for the real estate will always be steady.
And Victor, I believe and I want to agree that the real estate, it's an industry that majority have not yet invested in, and they should really consider.
They should consider it in the best way possible, because the more you invest in real estate and ensuring that your properties are quality, then the level of retention or retaining of your clients will always be higher. Quality over quantity. When you've done great quality in terms of real estate and you have the right clientele and you have a steady flow of income, it's like a rich man making money while he's asleep.
So, Victor, I want to believe it's time we call it quits for today.
Yes.
That will be our episode 1. Ladies and gentlemen, once again, I have been your host, Dominic Mwangi.
I've been the co-host, Victor Kiplagat.
And for now, goodbye.
Goodbye. Take care.